Hello and welcome, traders. I'm Valentine, your host for today's insightful discussion brought to you by ForexPropFirm.com. In today's episode, we have the privilege of diving into the minds of experienced traders as they share their strategies, insights, and journeys in the world of trading. Whether you're a seasoned trader looking to refine your skills or a newcomer eager to learn, you're in the right place. So grab your notebooks and get ready to take notes because we're about to embark on a fascinating journey into the world of trading excellence right here on ForexPropFirm.com. Without further ado, let's dive right in. Let's turn our attention to our esteemed guest for today, Gregory. Gregory is not only a seasoned trader, but also a standout member of our trading community here at ForexPropFirm.com. Gregory has a 100K funded account. Today, Gregory is here to share his secrets with us. Get ready to learn from someone who's really done it. So let's give a warm welcome to Gregory. Gregory, how are you doing?
Oh, thank you. I'm doing well. It's nice to be here. I appreciate the opportunity and ready to get started.
Perfect. So maybe tell us a little bit where you're from, how old you are, stuff like that.
Sure. Yeah, I live in California. I originally was from Wisconsin in the United States, and my family and we moved to California pretty much just to get away from the hustle and bustle and start focusing on family, and pretty much have the opportunity to use trading as the guide to keep our family going. And I'm just currently turned 50 this year, and it's like the second half of my life getting ready to go. So time to use my brain and not my body is the best way to say it, to continue forward.
Yeah, that's a nice saying. Perfect. Okay, awesome. So let's dive a little bit into your background. So could you give us a little bit like an overview of your trading journey?
Sure. Pretty much I've been involved with it for quite a few years. My dad got me started looking at IRA accounts and things like that back when I was a kid. So I've been involved with putting money aside since I was like 12 years old. And over the years, I've like pretty much focused on options and stocks for quite a bit of the time. And then after a lot of the big crashes in the United States have happened, it just kind of deterred me from that. And I've guess over time, I've just kind of gravitated towards currencies. I just enjoy them more. It's a lot bigger market, and it's just one of those things that I enjoy being involved with, I guess, best way to say it.
Okay. Yeah, awesome. I think in my opinion, most of the people I talk to are starting with like stocks and then they move over to Forex and stuff like that. And in my opinion, Forex really is a lot of money in there, a lot of volatility. So
Right.
it was the same thing for me. I started like investing in some stocks. I really didn't know much, so I just put some money into something and maybe turned a little profit out of it, but nothing too big. But over the time, I was moving into Forex as well.
Yep.
Okay, so let's talk a little bit about your trading approach and your style. What is the trading style you primarily use? Is it like day trading? Is it swing trading?
I primarily day trade. I like to swing trade, but I find myself more concerned about the trades throughout the days if I'm leaving them open for a while. So I prefer to have my trades usually completed in the same day.
Okay. Yeah, I think you really need a different kind of mentality for the swing trades, because if you are in profit, it takes really a lot to just not realize the profit and just leave it running for your target, you know. So in my
Right.
opinion, it's too hard for me as well to go for like swing trades to hold it over the course of like days or even weeks. So I got the same approach. Was it the whole time that you were like day trading, or did you try something else as well?
No, I've tried different strategies. I've tried day trading in the beginning, then I tried swing trading as well, where I just hold it for a couple positions for a couple days, and that's pretty much as far as I've gone. Like for investing, I've had stocks and things like that, like Apple or Google, things like that, and I've held them for several years, but that's like in my IRA account. So if I'm going to buy something and try and hold it, I do that in an IRA or retirement account, so I'm not focusing on it. So then I know I'm not really going to be worried about what's happening to it tomorrow and things like that, where when I'm focused on my ability to put food on the table and things like that, I have to be more concerned about the profits and letting them. We're pretty much having a target profit allows me to know that I'm going to make my goal for that day, and my goal is set. So once I reach that goal, I don't have to continue forward like chasing the ultimate dream or whatever. I know that I need to get a certain amount, and that's where I stop at.
Okay, yeah, great. I think it's very important to get a system in place that like stops you from overtrading. How do you manage that? Do you have a percentage goal you want to reach each day and you stop afterwards, or how are you dealing with that?
I've tried percentages and I've tried dollar amounts, and I think when I focus on a percentage, I do better because I'm not thinking about it as money. I'm thinking it more as a job, and then my percentage is usually 1%.
Mm-hmm.
So I try and make between $712 and $1,000. That's what I call my splatter zone. If I hit my splatter zone, I know that's gonna afford me to be living where I am and doing what I need to do.
Okay, so are you trading every day, or do you have like a sweet spot in the week where you're most active?
Usually more active in the beginning of the week.
Mm-hmm.
Seems like Wednesdays and Thursdays are kind of a draw day. Those days I have quite a bit more going on, so I try and focus more on seeing what's happened earlier in the week and then getting ready for like Thursday and Friday to trade. So I usually trade a little bit heavier in the beginning, the end of the week, I guess.
Okay. And what pairs do you trade, or what do you favorite?
Personally, I like the New Zealand dollar, and I like to trade for commodities, the gold US. The pound dollar is another one that I like to trade. And I usually keep trading things that are backed by the US dollar just so I have that as my main stay. So I don't really get into the exotic pairs and things like that. I stay with the majors.
Yeah, okay.
For the most part.
Yeah. I think it's, to be honest, for most of the people, it's you get the best out of it, you know? It's really, in my opinion, not really the easiest to trade, but definitely the best with the most, volatility as well. So for me, it's only Euro US dollar and GBP US dollar, and I switch between them. So I look at Euro pound, which one is stronger, and after that, I'm looking to trade the one that I favored out. So at first I was looking at all of the majors, you know, I was going through them all,
Right.
and then I was checking for an opportunity. But to be honest, if I really narrowed it down and focused only on these two, my performance really was going through the roof, you know, because in my opinion, if you trade one pair, that it's completely enough. You will definitely get enough opportunities to trade, and you don't really need like 1,000 different things to trade, because the one will offer you the most opportunities if you really have your, let's say, outlook, or if you really have what you're looking for and you're waiting for that to happen, and then it's a little bit easier in my opinion.
Right. Yeah, I do like to trade the euro. It kind of like goes in cycles for me. Like I'll be trading the euro US dollar for a while, then all of a sudden I'll start looking at the charts of the pound, then I just switch to pound. So currently I'm more of like into the pound and New Zealand, what time of day I'm trading.
Yeah.
I'm in California, so I'm literally get up and trade at 3:30 to 4 a.m. so I can trade the London time, which is kind of weird, but
yeah,
that's where like the overlap from the US and London is at, and that's the best trading zone for me, is in that little section of time. Otherwise it's kind of like not enough volatility, and it's just not really the most productive times to be trading when I'm not doing that at that time of day.
Yeah, of course. Yeah, I had that discussion with someone out of the UK, and I'm living in Germany, right? So for me and for him, it was like London is early in the morning, like around 8 a.m. and New York is noon time for us. So really living in Europe is perfect because you get the best out of both, and you really don't need to get up in the morning. And I was talking about how it needs to be if you're living in the USA. You need to get up at crazy times in the night to trade London. So really, I think New York offers enough opportunities, but London is definitely great to trade as well. really depends on your strategy and what you're looking for.
Yeah, I like to stay up and like get everything done because I have twins, so I got to take care of them and get them home to bed. And then I have a couple hours in the evening to get ready for the London Open. So I usually am awake for the London Open, then I get up and trade that time for a while, then go to sleep for 4 or 5 hours and get up and get ready for the US Open.
So do you sleep prior to London, or do you just
I just stay awake usually for it and get ready for it and just prep for it. Then I'm ready for the London Open. Then I take a few hours sleep and get up and see how the positions are doing because it helps me wake up.
Yeah, that's true. Okay, nice. Can you describe your trading strategy and the key principles or maybe indicators you're relying on?
I like to use pretty much like a crossover of moving averages as an indicator. It's like one of my major things I look for, as long as just pretty much looking at the candlesticks and looking for key patterns and candlesticks and looking for what I consider breakouts. So I'll set up key zones and look for one of the currencies that come up to a key zone and try and decide on if it's going to go through the zone or if it's touching the zone, collecting orders and going back in the other direction. So it's pretty much waiting for the confirmation of the, like, I don't necessarily like to trade the first couple candles. When I see something happen, I want to wait for the confirmation because I've been stung a few times when I thought it was going the right way, and then all of a sudden it does its own thing. That's for sure. You can't predict it. Just look for the unfilled orders on the charts and wait till the indicators confirm that that's where it's getting to and turning at.
Okay, great. Sounds awesome. When we are talking about risk management, how do you approach risk management in your trading, and what techniques do you use to mitigate risk?
That's kind of an interesting question. It's like been taught like certain percentages, like 2% is a really good amount. In the beginning, I was trying to use my strategy of 2% for the full account, which is like obviously 100,000. But that's then as I started trading, I'm realizing that I think that's a bad strategy because of the fact that, okay, that gives me a lot more drawdown that I can't handle at times, and I can't put my stop losses where they need to be because it's of just different reasons. And so I've realized what I've been trying to do now is keep my percentages towards the overall drawdown amount. So I'm trying to trade at 2% of the overall drawdown, which would be $10,000 for my account. So that's kind of like each trade, I only have 2% of the drawdown as my max loss. It helps me figure out my position size a little bit better. Instead of just kind of guessing at what position size you should have and things like that. So I've started incorporating math to figure out exactly where and what I need to be doing for this overall drawdown amount as my actual percentage.
Okay. Yeah, you need to just go on Google and type in, there are a lot of position size calculators where you're typing in, like, if you got a 20 pip stop loss, it really counts out your percentage that you're risking, and then it's a little bit easier for you to set your risk, because then you're not really so much guessing, you know. For me, it's like most of the times I risk 0.5%, maybe like to 1% risk, because I don't like to have more than 1%, because I really don't, my mind is not really allowing me to get through that drawdown, you know. Most of the times, if I was risking more, most of the days, if it was a 2% thing that I was risking, that was a loss. The next one, I was turning down my lot size, so it was like 1%, and that one was most of the times the winner. So I was getting myself into a drawdown by increasing the risk. Afterwards, I decreased it, and it took me a lot longer to get out of the drawdown, because I don't know if it fits you and you're trading like your 2%, it's really fine, but it's a lot harder to mitigate the drawdown if you have one, because it's harder for your psychology to get out of the drawdown, you know. Because in my opinion, it really doesn't matter what strategy you're trading. The most important thing is risk management, to approach it and to stick to your same risk. I am doing a weekly outlook on Saturday, and I'm watching out for the economic calendar, and then I am setting out what risk percentage am I willing to lose over the course of the week. Let's say I define Wednesday and Thursday, that's my best days of the week. I'm setting out like to lose 1 hour, to lose one risk that I'm doing. It's like 1% for me personally. And I'm aiming for 3 hour over the course of the day. If I lose on Wednesday, I go again on Thursday, risk another hour. So if I lose, I'm down 2%. And then I stop trading for the week. Because afterwards, my psychology is a little bit messed up and I'm trying to get out of drawdown. Most of the times I had the problems because I was so fixed on trying to trade out of drawdown that I just put on some weird positions what really wasn't high probability for me. And if I get a win on Wednesday, I just stop trading for the week, because if I do 3% in 1 week, I'm completely fine with that, because over the course of a month, let's say I get 3 green weeks out of 4, I'm like 9 to 10% in profit, which is like really awesome. I was thinking about in the past of like do 3 hour every day, but that's just not realistic to me. And if you get your consistent profits and like, let's say your 3 hour over the course of the week, the capital will do the heavy lifting for you. Because just imagine, if you got a $10,000 account, 3 hour is really not that much. But if you imagine in a few years from now, you're managing like $1 or $2 or $3 million, what are 3%? If you're doing that consistently with just one trade per week, I'm just sitting in front of my screen for like 1 hour per day on Wednesday and Thursday. Then I'm going to take my trade, and I'm perfectly fine with that if I imagine myself in a few years from now making like a couple, like 5 or 6 figures with one trade in like 1 hour, So in my opinion, it really depends on the perspective you're having, but it's a really good tip to set yourself out the goal, which risk percentages you are allowing yourself for the week, to just even stopping when you're having the percentage, because that most of the times stops you from really overtrade, because one of the hardest things for me was making profit early in the week just to give it back on Thursday or Wednesday. That annoyed me so much, and it was one of the baddest things that could happen to me, So I just set out to say, okay, let's do 3 hour, and if I get it, I'm done. Because I'm trading for freedom and not really to sit in front of my screen the whole day. At first, when I started out with trading, I was like sitting in front of the screen for like 6, 7, 8 hours per day. But really, what my performance wasn't that good. And I decreased the time that I'm sitting in front of the screen, which really improved my trading and my overall being, because I don't really want to be a slave to the markets, if you know what I mean.
Right. Yeah, that totally makes sense. Yeah, I totally agree with that. I think that makes more sense, because I wasn't doing that. I've like where I start over trading earlier in the week and I do well, and then all of a sudden I give it back on Wednesday afternoon or Thursday. I've done that over and over, and then I stop trading. I don't trade Thursday and Friday.
Yeah.
And that, like, it doesn't happen a lot, but those weeks, and those are the ones that you remember. You don't remember the weeks that you have profits.
Yeah, so true.
And those are the ones that sit back and hold. So I can totally see where that 0.5% to 1% could really benefit me, because I know that 2%, when I start thinking about it, that drawdown mentally starts playing a game like, okay, I got to really monitor this, just because I can't let the drawdown get down too much, because it's going to affect my day, my next day, and things like that.
Yeah, of course.
Yeah, I think I'm going to start trying to do that with a less percentage, because I know 1% even off of what I'm trading right now with a $100,000 account is still a reasonable amount to be considering. So that's
and that's
3 to 1 is like ideal. I think that's a great strategy.
Yeah, and that's really the point what I was making, because you don't need to risk so much, because imagine yourself hitting three trades and all of them three are losers. Now you're 6% in drawdown. How
Right.
are you going to handle that mentally? Because just think about the numbers. Let's say you're taking 10 trades, right? Out of these 10 trades, let's say seven are take profit hits and three of them are losers. If you, let's say, hit three of the losers back to back to back, how are you mentally? Because most of the time, the people really don't focus on the outcome over the course of 10 trades. If I say
Right.
to you, after these three trades, the next seven trades all are going to be TP hits. The only thing you're focused about being 6% in drawdown is how you can handle that drawdown and how to get out of it, you know? And
Right.
most of the time, it messes so much with your head that it's one of the hardest things to do to trade yourself out. To trade yourself out of drawdown, for me personally, it's one of the hardest things to do,
Hmm.
because it's just so hard and you're focused so much on getting back that it's, yeah, really hard, really not a good situation to be in. So I would really say decrease the risk a little bit and
Right.
go from there, because as I said, think about the capital you are doing. And let's really think about, if you got 2 to 3 million, would you really risk 2% on that much capital if you know
That's
what
true.
you could potentially lose?
Yeah, that is very true.
So
Not a
every time I take a trade, I really ask myself, would I take this trade if I manage $10 million? Because if not, I'm not going to take the trade, or I'm not going to take that much of a lot size, because that's just a thing you need to consider, because capital will do everything for you if you put your risk management in place. All of the prop firms out here have like no time limits, and there are so much different strategies you can use if you just make consistent profit. It really, trading isn't really about, it's not a marathon, you know? You
right.
need to be consistent over the course of a very, very long time. And I think if you decrease your risk, it will help you to stay in the game longer.
Yeah, that makes a lot of sense. Because when I'm trading like my personal accounts, 2% doesn't seem like as much because
Hmm.
it's just my personal account. But when you're dealing with something where there's a finite amount that you can lose, it really plays mental games on you. That's for sure.
Yeah, yeah,
That's the biggest challenge I find, is just dealing with the mental anguish of trying to think, okay, how close to the drawdown is this one going to get to? If can I have two positions open right now? Because if I do, what's going to happen if drawdown happens on one? Is
hmm
this going to affect the other one? Then it definitely makes trading a lot more difficult. I agree with that. So you've convinced me that I'm lowering my risk down, because risk is definitely the key to proper trading. If you don't manage your risk, you're taking way too many chances. And I know right now it seems like I'm taking too many chances in my personal concept because of the drawdown amount. It's like you said, you
hmm
lose three in a row, that's 6%. Now you've only got literally less than 4%, because you can't hit that 4%. You're done.
yeah,
So
that's the thing.
3% and 6% right there, that's a huge difference. That just in that little concept right there, you gain 70% of freedom right there is the way I see it.
Yeah,
So
yeah, yeah, of course. And one thing I'm recommending all of the guys that ask me for that, a little bit of about mindset and the state of mind you're putting yourself in, is to really, if you're trading, don't focus on the outcome and focus really on the process. I'm not really worried about how much I'm making with that trade. I myself know that the outcome of every trade is random. The next trade always could be a loser, and the next trade always could be a winner. So I don't really concern about what the outcome will be. I just am going to do the right risk management. I'm going to say, okay, I allow for that trade to get like a -1% hit for me. And I'm fine with losing that amount of money. Because if I'm not fine with losing the amount of money, I'm worrying about if it's while it's on the way to my stop loss. And by really thinking about the concept that every trade is random and you can't really foresee what the market is going to do. So the only thing that's in your control is managing risk. If you manage your risk properly, the rest is easy. Your analysis is easy. Most of the people I know have a profitable strategy. They only need to manage their mind and to not overtrade and do stupid bullshit. Because when I started out trading, most of the times I was failing challenges and stuff like that. I was just doing dumb shit.
Yep.
And as I matured as a trader, I was really focusing more on managing my risk, managing my exposure to the markets, because every time you're risking something in the markets, you can't foresee the outcome of that trade. It's random, but trading really is a numbers game. You need to focus over the course of 10 trades, not what is the next trade doing for me. I really don't worry about that, because even if it's a loser, I know, okay, my next win is going to come. Over the course of 10 trades, I'm definitely being more profitable by doing like 3% gains with 1% risk. And by doing that over time, there is no need for you to get into drawdown.
Right.
No? Yeah. Okay. So a very important question for me to ask is, what are some key lessons you've learned from your trading experiences so far?
Some key lessons. Well, over trading, that is probably the biggest lesson. You get excited, you start watching it, and you see some money going into your account. You get excited, you keep wanting to get more, and next thing you know, if you lose focus and you're not actually trading any strategy. It's like if somebody asks you, what was your strategy in that last trade? If you can't give a right answer, you should probably not have been in the trade. So I catch myself at times, one thing I have to write down and literally post it on the wall to remind myself, to only make a certain amount of trades. So make a trading journal is what I've started doing. So I start monitoring my trades and I write down what the process was. So that way, if I have to do all this paperwork, it's going to prevent me from over trading as well and make me focused a little bit better on why I'm into the trade and what I thought the trade's outcome is going to be, and just be satisfied with it. Like you're saying, I can't change the outcome. I can only project where I think it's going to go, either as a target profit or as a stop loss, and just let it go at that. It's like you set it and then just kind of have to forget about the trade and just let it do its thing.
Yes.
You can sit and monitor it, of course. That's where the emotions start getting into the way of your next trade then.
Yeah.
And so that's, like, for me, it's literally trying to focus on that over trading and focusing on letting the trade play out. So as soon as I see profits, I want to get out and take the profits and run. Then I watch it go right to where my target profit was. And like, what the heck did I do that for? Why did I was satisfied with $100 instead of $1,000. That was pretty stupid. And it's just those little things you learn. Get your fingers off the button, I guess. Best way to say it.
Yeah, of course. What I do there is I just place invalidation points for me, and I know if price trades through a level that I outlined up front, I know that the trade most likely is not working. So I just close the trade. But the thing is, if I'm seeing price going to my stop loss, my mental game kicks in and I'm always asking myself, what if this trade is going to be a loser? The answer to that is, it really doesn't matter. I put the stop loss there to prevent my account from blowing up. But if you think about your stop loss and your take profits as being your best workers, as I said it, they are doing everything for you. You don't really need to do anything else. If you have invalidation points where you don't want to see price trading through, it most of the time prevents you from collapsing a trade early. Because I did that myself so many times. I really can't count how much it was, because every time you close it and you look like 1-2 hours later, price is just ripping through your take profit, and you were like, What the hell? So, and the
Exactly.
thing is about trading, if you have an approach like this and you think about, yeah, I have to stay longer in the trade, most of the times, the next time, what's happening is you're back to doing some dumb shit in the markets. And that happens to me. Or I would say it happened to me. I just overcame it by the things I just mentioned. And there's really, how should I say it? In my opinion, trading is the hardest thing to do mentally, because to be profitable, you need to get your mental really in check. And I heard from my mentors that I should focus outside of trading on my personal life, and I don't really knew what they meant until I started hitting the gym. I was starting to eat right. I was reading books every day, and by doing that, I really wasn't focused so much on trading and on my
Mhm.
analysis, but I was focusing on myself, and the trading was like just on the side for me, you know? I am taking trading as a vehicle to take money out of the markets, but really it's nothing more than just pushing buttons, you know?
Mhm.
You really need to take it as what it is. And at the end, trading is not hard for the side, like it's just pushing buttons, and the analysis is not the hard part, but the mental game is, in my opinion, the hardest thing to overcome, or to
Mhm.
overcome for trader.
Yeah,
Yeah.
I agree.
Okay. Are there any common mistakes or pitfalls that new traders should be aware of?
Chasing the market is a big thing for me. I think when you see a market's going one direction, you think, oh, I got to hurry up and jump onto that. As soon as you do is usually when it turns the other direction, comes back and takes you out. So I think a big thing, just don't be chasing after the market. Just do your analysis and be satisfied with your analysis, and put your trade in and let your trade happen. Don't be chasing it.
Yeah, great point. Okay. If you guys want to know more about FPF, you can go to the first link in the description. That's it for the interview today. See you guys in the next video on the channel. Take care.